Hey, everyone. Welcome to this week's Multifamily Investing Academy podcast with me, Charles Dobbins, your host, the multifamily attorney, and I have a treat for you today. I'm recording this call in January. Now, you all know what happens in January. We start talking about taxes, and I always get the call from my students and my clients, Charlie, can you recommend an accountant? Folks, I'm going to recommend my accountant to you, and you're going to meet her, Christina. This woman has done wonders for me and how my taxes are filed, and I want you to meet her. Listen to this podcast. It's an absolute laugh riot. If you could ever think that you got to have a lot of fun with an accountant, we did. All right, so listen to this call. You're going to be able to click on the show notes at the bottom. If you want to book a time to talk with Christina, I highly recommend it. She saved me so much money. She set my business up on a tax plan strategy that is like nothing I've ever seen before. I cannot recommend my accountant high enough to you. So enjoy this podcast, and I'll talk to you on the other side. Well, welcome, Christina, to my podcast. It's so good to see you.
Thank you. Good to see you too.
Thank you. I tell people ask me all the time, like, who can you recommend as a CPA? And for years, I couldn't even recommend my CPA. And then all of a sudden, you and I got connected, and now I can't recommend you high enough to everybody. So it is so great to have you on the Multifamily Investing Podcast with me, Charles Dobbins, the multifamily attorney. Welcome.
Thank you. And thank you for the recommendations.
Oh, yeah. No, listen, by the time we're done, everybody's going to understand why and how having a CPA that knows how to strategize and plan is gold, absolute gold. I mean, for you, one of the things that makes you different is, not only are you a CPA, but you're also an attorney, which makes you twice as much fun at parties, right?
That's right.
Yeah.
I'm a riot.
I bet. Oh, no. There comes Christina again.
Very entertaining, a tax attorney.
Lock the liquor cabinet. Here comes Christina.
I'm very popular here in my community.
Yeah, of course. Well, you're going to be popular here because obviously, we're shooting this in January. And, people, you just sent me my tax planner. I see that.
Yes. Oh, good.
I've been sitting down there during football games and cleaning up my profit and loss statement on QuickBooks so that when I get it over to you, it'll be absolutely perfect. But now is the time when people start talking about, their taxes, start thinking about it. They're starting to get their 1099s. They're starting to, start to receive it. And this is like, oh, crap. Here we go again. But let's talk for a minute. I want to talk about my experience with you and how different it was. Now, so a little bit of history with me. We had been using the same accountant for years. And my wife handled the accounting. She handled doing all the books. And, I'll tell you, he was unresponsive. There was no imagination. You hear these people talking about, my accountant has me doing this. And, here are some strategies for tax planning. We didn't have any of that stuff. And,
right, yeah.
And so finally, I connected with you through probably the power of the internet, but you took my information. I sat down and did a whole questionnaire with you. You took my information, and then you pitched me. What was that all about? I mean, it's like a CPA was a salesperson. You showed, my wife and I got on a Zoom call like this, and you ran a PowerPoint to show what you would do differently after looking at my tax returns. And I'm going to share with you, the last 10 years, my tax returns have not changed one iota. I mean, you just put the numbers in the same boxes, no thought, and then hit the enter button, and that was it. But then I sat down with you, and you took the time to go through and actually come up with strategies. The strategies that blew my mind. So let's talk about your process for when you meet a new client. Like assume we had just met.
Right. Okay. Well, thank you so much for that great feedback. So, and I just, to your point, and I hear this all day long, and this is why I have clients all over the United States Because I'll reach out to people and they say, well, I'm just too far away. I go, oh, no, 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 no. You want to shake hands or do you want to save money in taxes?
Exactly. Christina, I love you. I love you. But we don't have to break bread.
Right.
I mean, believe me, my comment about you being fun at parties was a joke. Okay.
And so, yeah, it's just amazing that other CPAs and accounting firms, I mean, with the sophisticated software now, and really, honestly, the software does most of the work. If you have a basic knowledge of tax, returns and just basic deductions, and that's what people do now.
No, they're actually starting to create CPA robots now.
Yeah, I believe it. I think they're there. I think I've met some at these parties. It's just so easy just to have your staff, just put in the numbers, and the Drake is what we use, but whatever software program, it's so sophisticated now, they can just print out a return, that's correct, with what the information you've been given. And the IRS is going to love it because they're getting plenty of money and they're never going to tell you if you overpay. They'll certainly tell you if you don't pay enough.
Yep.
But if you pay too much, they will never tell you that.
Yep.
And that's how CPAs and accounting firms now, the vast majority make their money, is volume.
Yep.
And it's just a whole different business model. So my business model is first and foremost, because I do have such a passion for helping business owners, and particularly attorneys and other investors, real estate investors as well, to save money in taxes, because if not, you're just going to get slaughtered.
Yeah.
Because the system is just so unfair the way it's set up. The more you make, the bigger percentage that you're going to send to the IRS. And they don't care how much you've sacrificed and how much you've worked and how many years that you haven't made any money and maybe how much debt you even have, or student loan interest. I've been talking to people of other student loan interest, whatever. They don't care about that.
Hold on, let me just stop you right here, because I want to ask you something as a total aside. This is what I heard from another CPA who does most of the state work. He said that the recent changes in the tax laws, you hear all the politicians, especially Democrats, saying the rich need to pay their fair share. What he said kind of surprised me, and what he said was that based upon the new tax laws under Trump, the rich are actually paying more than they were the years before. Would you say that's true?
Well, it depends. There is a category of the top.
Depends. The answer, when she just gave the answer, depends. That's the lawyer side of it.
That's right. It depends. It depends. It depends on where you fall in the tax bracket, but there are some people that are paying more and their tax rates actually went up, unless they're my clients, and then they don't pay.
That's what I want. See that little softball I just threw right there?
Yes. They don't pay too much.
Exactly.
It's interesting. Actually, the wealthiest families in America pay an average, of 11 to 16% in taxes. And that's not all capital gains, because capital gains, their tax rate is 20%. Yeah. And it's because now they usually have the, top law firms where you have to have six figures even to get in the door, working on their tax returns. And that's what I do for a much more reasonable price, and for, investors, entrepreneurs, business owners, and attorneys.
Yeah.
And the reason why other CPAs and accounting firms don't do it is because the tax code is 60,000 pages long, and they just don't have, honestly, the time, the knowledge, or the passion like I do. I'm totally obsessed with it. I'm obsessed with taxes and golf. Those are my two obsessions.
Oh, wait, well, maybe we will get together when I'm down there in Florida, because
absolutely.
I'm all about the golf. Absolutely. Awesome.
Oh, good. Yep, yes, I am too. Cool. I'm going to a 3-day golf school next week in Phoenix, Arizona.
Oh, good for you. I took my son to a golf school up in Maine. We had the best time. We had so much fun. And we had a guy, a former, he played on the Nike tour. And those professionals just make the game so easy looking.
Don't they?
It
makes you sick.
It does. He hit the pin on a par 3, and then he throws his club down and goes, damn, missed. I'm like,
oh my gosh.
I know, exactly. Oh man, they're unbelievable. That golf school, my son and I are going to try to get up there again. It really was a good for you. That's a blast. Oh
yeah. We've got tons of courses. I've got the hookup. So let me know whenever you want to come down.
Cool.
Fort Myers, Florida, or anywhere, Naples.
Well, I'm playing in. I'm coming down. I'm doing a 2-day event in Orlando coming up that is being announced right now as I speak. I
Oh,
haven't even announced it to the world, but I'm coming down there. We're putting it all together now in Orlando. I don't have the date or anything yet, but it's going to happen soon. So those people listening to my podcast, I'm going to be speaking for 2 days all about multifamily in Orlando in the beginning of 2020. So watch your emails. Okay, now move on. Let's go back
yeah.
to your passion, golf,
Yes.
but taxes. But so your clients, let's talk about what you did for me and
Uh-huh.
how
Okay.
you pitched me. So I can't remember. I think I gave you my tax return. Is that what you used? Okay.
Yes.
Okay.
You give me your tax return, and there's usually a couple of different questionnaires, very simple, that
Yeah.
we have you fill out. 2 years of tax returns
Yeah.
is really good. And then we always look at someone's entity structure. I mean,
Yeah.
there's so many different ways that
Folks, let me
entities
just tell you.
can be set
Let
up.
me tell you that. I mean, not only did she look at my entity structure, but we changed things
Hmm.
about my entity structure. That why didn't the last guy
Yeah,
tell me that?
I know.
Oh, kill
Well,
me.
they just don't have the time,
Yeah, yeah.
and you're paying them every year, and you
But
and
not
then.
only that, but here's the thing that you did differently that was really cool
Mhm.
is in your PowerPoint presentation, you showed me this is what you have now, and this is what you need to switch to, and here's the savings. And you put a
Yes,
dollar figure next to that number and next to that change. And I was like, oh, really? If I just do that, I don't have to
yes,
pay that. That was eye-opening to me. And you made me happy and mad at the same time.
yeah,
I know, I know. And
yeah.
so, listen, if the folks in the podcast haven't realized it yet, I can't speak highly enough about the service and the professionalism that I've got out of Christina's office. It's been absolutely fantastic. So let's keep going here, Christina. So tell me more. You got my information. You plug it
Mhm.
into your program, and then what you ended up doing was coming up with a PowerPoint presentation for what you could do for me.
Right, exactly.
Yeah,
And everyone is
yeah,
different. So, it takes a lot of time, and my whole team, it's not just me, but of course I'm the one that present it. And, but I've got my whole team working on it and doing different scenarios and going, through our software and looking at different strategies and how they may or may not, help you depending on your situation. So each strategic tax plan is what I call it, the STP, is customized to each individual client. So no two tax plans are exactly alike, that's for sure.
yeah.
And so I take your situation, depending on and your lifestyle, your family, your business, your personal expenses, your business expenses. Look at your net worth. I mean, there's so many things that I'm able to look at. Whether you utilize a home office or not, or do you work outside of your office? I mean, there's so many. Just having a home office, and there's just so many different ways that you can use it to benefit. By reducing your tax liability. And that's just a small thing. That's not even, my more advanced
Right, right.
strategy. But when you look at it, you look at the numbers, I'm like, oh, that may really make sense. We're talking about usually tens of thousands of dollars that you can save depending on how your home office is set up. And the great thing is, like we implement everything for you, right? So we don't just
Yeah.
tell you like, this is what you
Yeah.
need to do,
Yep.
but we also implement everything. So if you need to change your entity, we do that. If we need to set up an entity, we do that. If you need a home office, we got the contract, we got the invoice, we got the operating agreement, we've got,
Folks, let me tell
everything.
you, that is exactly right. I needed an operating agreement for some reason on one of my entities, and I'm an attorney, so I have them at my fingertips, but it had to be a special one for what we're looking to do. I just emailed Christina's assistant, and boom, it came right over, right there. And then let's kind of go through some of the things that you changed for me. We can, we don't have to get into numbers and anything, but and let me tell you something, folks. The tax savings that we're talking about were very substantial when she went in and changed a few things on my return, and just even a little fast forward when she had finished my return for the first year that she worked for me. and then I had some IRS crap going on from legacy stuff that I had to get cleaned up. So I had to get a bunch of my returns together. I got 2 of my old returns from the old guy, and then I get Christina's return. And you would think there was 2 different people. You would think it were 2 entirely different businesses. The returns that the guy did for me were just like plug and play. Christina's had thought behind it. It had like strategy behind it, and you could see it in the return. It was I was like, oh, this is fantastic. So let's talk about some of the things that you did. Let's talk about one that I'm still reeling from. The guy just makes me so mad that this guy could have done this for me years ago, but never even thought to do this. So you had me take an online questionnaire. You said part of the process was you sent me a link, said, fill this out, and then the results come back to me. Tell me what that questionnaire was all about.
Right. So for you, Charles, and one thing that I do with some people, again, depending on their situation, is maybe have their organization or their entity that maybe they've already set up, but how is it taxed? One of the things that you can do is you can tax it as an S corporation.
Okay, so I'm an LLC. I was an LLC, and I was just, I think when I filled out the questionnaire at the Secretary of State's office, it asked me, how are you being taxed as a partner or what have you? And that's just with the Secretary of State's office. Then every year that I went and did my tax returns, I just, my accountant said, oh yeah, it's a partnership or whatever it was, or a single purpose entity, whatever box it was that he checked. And that impacted how my taxes went through. Now you come along and you tell me we're not doing it that way anymore. So what did we do?
So, the way you were set up at that point is that all of your income that you made, not only were you taxed at your ordinary income tax rate.
Just for the record, everybody, Christina knows I make a lot of money. She finds me incredibly attractive, not because of my good looks. It's just she saw my tax return. So, but go on.
And you do have an incredibly sexy voice. You have to say. Let's just get that out there. Anytime we get
that's the only thing I got going for.
Anytime Jennifer gets a video from you, she goes. She always sends it to me because one, it's funny.
Yeah. Okay.
And two, you got that sexy voice.
I'm all for the laugh. My mother asked me in 4th grade, what would you rather have, an A or a laugh? I looked at her like, that's the stupidest question I ever heard. Yeah. Anybody can get an A. I want to laugh.
Oh yeah, so you're very popular in this office.
Oh, good. Not because of how much money I make, but because I'm a funny guy. Okay, all right, fine.
Right. Yeah, right. And a sexy voice.
All right, cool.
When we did your webinar with your other clients that evening, and the next morning I emailed you and I almost said, I had so much fun with you last night. And I thought, wait a minute.
Oh, believe me, that would have made it onto the wall. Okay, that one would have made it on the wall.
That would have gone viral. So I was like,
folks, as I always say, it only takes one yes for success.
So I was like, delete.
No. My email is just like my podcast. Just say and do whatever you want. Say whatever you want.
Oh, I know. But I was like, wait a minute.
Yeah.
While my husband's walking by, I'm typing that out.
Yeah, definitely like that. Like hide the screen when he walks by. Yeah.
He's like, now who is this guy? It's funny. Anyway.
No, that's not what he says. Even your husband says, now who's that guy with the sexy voice?
That's right. That's right. I want to hear him again.
So you changed my structure.
Yes.
From what it was before to an S corp, and you because you knew you plugged it into your system, and you knew that hey, we do it this way, we can save some money.
Right. Because most people, and again, if you're already an S corp, I get a lot of clients that are already maybe an S corp, and that's great. There's lots of other strategies, that we can use. That's just like low hanging fruit.
Oh yeah, absolutely. This is just one of like 10 strategies that you got me in. Yeah.
Right. So, most people, when they set up an entity, if they're just an LLC or if they're a partnership or their file is a Schedule C, they're paying not only their ordinary income tax rate, but they're paying that additional 15.3% self-employment tax. 15% up to $135,000 on their income. So now, I mean, if you can save that off of that, that's, you're getting into tens of thousands of dollars, plus even beyond that, it can be 3%. And what the IRS requires. So here's another thing too, is even I've seen a lot of clients when they become clients of ours, they may have filed an S Corp, but their accountant is doing it wrong, not doing it correctly, because they are. And that's why a lot of accountants don't do it. And this is why your accountant didn't want to set you up like this, because there are a lot of rules and regulations around it, and they're scared of it because you've got to be engrossed in it.
Yeah.
You really have to know it inside and out.
Okay.
So, yeah, I've been doing this, over a decade. I've been an S Corp for years. I have studied this. I've taught classes. I've gone to classes. So anyway, so one, you want to make sure you do it right. Two, you have to pay yourself a certain salary. And that's what that survey was for.
Yeah.
So you pay yourself a salary, and you want to get that as low as possible, because that you will pay self-employment taxes on the salary, but then anything above that is just going to be considered a distribution, and you don't pay self-employment taxes on that.
Let me stop you right there, because I want everyone to understand this, okay? So I took this questionnaire. I didn't know why I was taking it. It asked me 150 questions or something. Like, what do you do this? Who changes the toilet paper in your office? Who does it? Stuff like that.
It wasn't that bad.
It was pretty darn close, okay? And then I hit the enter button, and it comes back and says that I should be paid based upon all of the things that I do in the office. I should be compensated at a rate of $90,000 per year. And then I thought to myself, that doesn't pay my bar bill at my country club.
Right.
All right. So how can I said, Christina, this doesn't make any sense. What does this $90,000 mean? And your response back to me was, oh, that's great.
Yes.
I'm like, well, explain to me how that's great for me.
So one thing too is when I do talk to clients, maybe they're already set up as an S Corp, they may already have a salary, and I'll ask them, how did your CPA come up with that? Or how did you come up with that? Whether it was your CPA or them. And they said, well, we just kind of plucked it out of the air. And I'm like, oh my gosh, because that's the one thing with S Corps. You have to have documentation for substantiation, basically for your salary. And that's what that survey does. It gives you substantiation. That survey, that's all that the whole purpose is to substantiate your S Corp salary, and it's based upon all the past tax courts and the rules and regulations. And then some clients will tell me, because I do work with a lot of, attorneys in addition to investors, but maybe the attorney will say, there's no way I could replace myself for $90,000, or that I could, replace and hire an attorney for $90,000 in where I live, or maybe it might be $50,000 or $75,000. But see, that's the beauty of it, of that survey, because with that survey, and you just think about, like, even in your own business, how much of your time is spent not just on legal services, which is what, most attorneys, their whole purpose is to provide legal services, but how much of their time being a small business owner is spent in management, consulting, and even marketing their business.
Right.
Or changing the toilet paper, or cleaning the home office, or talking to me. It's so funny because I'll be talking to him. I said, case in point, exactly what we're doing right now. You are right now a manager. You're wearing the manager hat. You're wearing the consulting hat. You're not being an attorney right now. Exactly. You're being a manager. So that 90,000 doesn't necessarily mean 100 of you being 100% of an attorney. Well, you answer those questions and you can prove it out yourself. And now we have that report. If you were to be audited, we just give them that report and go, yeah, here's how we substantiated, that.
And so now my payroll, because you got me on payroll now too. And, so I'm paying myself a salary based upon that report. My 401k contribution comes out of that. But I also pay,
withholding,
withholdings. And so that is, my self-employment tax is now based upon 90,000.
Right. Instead of the full profit. that you made, which is way more.
I know.
So much more, because you make so much money.
I cannot, so far at this stage of the game, I cannot outdrink my income, which is good. It's a good thing, because that would be really bad. $90,000. Okay, that's child's play in my book. But yeah. So now all of a sudden, that one burdensome tax that I dreaded every single year, because I could never get out of it, no matter what happened. I had to pay that self-employment tax. The guy next door to me who works for a bank, he doesn't pay that. I pay that tax. Now it gets honed down, and it becomes more manageable.
Right. Well, and see, the thing is, like, people who are W-2 employees, which that's what you are now, that with the 90,000.
Yeah.
The employee pays half of it, 7.5%. That's what's withheld, the FICA, Social Security, all that. And then the employer pays the other 7.5%. But if you're in business for yourself, and if you're not set up correctly, the IRS considers you the employee and the employer, and that's why you have to pay both halves. Yeah. Lucky you, 15.3%.
One of the cool things is that we talked about that Christina handles all this stuff for you. I just got, all it took to solve this problem was one IRS form that needed to be filled out. Christina filled it out for me, sent it to me, signed this, and sent it back. Done. Problem solved. How easy was that? It was beautiful. It was absolutely great. So bravo for you for that. That was step number one. Now let's talk. I got a couple of. I don't think we're going to go through all 10 or so of my
no.
But you will, people on this call. If you want to work with Christina, you're going to be able to just click on the show notes. You'll be able to set up a time to talk with her. But let's just pick out a couple of other beauties. Okay, now this one, putting my kids on the payroll. Mm-hmm. Now this one, because I'm not looking to get audited. If I got audited, I want to be able to document everything. I'm not looking to pull any fast ones on the IRS. Those boys do not play fair. I've found out. So I don't want to play with them anymore. So putting your kids on the payroll, let's talk about this. Mm-hmm. Because one of them is only 2.5 years old. Now I can't really get him to do anything I want him to do, but that's a typical employee, wouldn't you say?
Right.
No, I'm only kidding.
The model employee.
Yeah. You have employees like that too, don't you? Go ahead. This is not being recorded, Christina. Go ahead. You can answer that question. So. No. I have kids that know computers and Instagram, and I'm always on social media. That they know it so much better than I do. So this was easy for me. But talk to us about that strategy of putting your kids on your payroll.
So this is great. And with social media now, if your kids are, I think probably from 6 years old and up now. I mean, I'm not sure how young you can be, but they can manage your social media.
Yeah, they can tell you about this thing called TikTok, or do you know what that is?
I've heard of it. I'm not on it.
You and I are in the same boat. I can't keep up with this stuff, and they're already on it. They're already
I can't either.
Yep.
So what I tell people is there's so many different ways to employ your kids. And there's so many advantages. And someone asked me what about the child labor laws? Well, if you work for your parents, they don't apply as they do working for other people. So if your child works for the parent, as long as they don't do anything dangerous, so you don't have them on a construction site, you don't have them. For all you real estate investors out there, you don't have them, remodeling someone's apartment.
On demolition day. This is vision that's going through my head of somebody with all his kids doing mortar work on a chimney or something like that.
Right.
Don't do that.
I wonder about, the fixer-upper. On demolition day, every once in a while they'll have the kids, and I'm like, oh, they better be careful.
Oh man.
No, I'm sure they're very safe with the kids.
Oh yeah, I'm sure too. Yeah, sure. Yeah. You just keep telling yourself that. Yeah, sure.
Although I did read their book, and when the first kid that they had, Chip would actually leave when his wife would go running, he would leave the baby at home and forget. And he had to keep.
I totally believe
Joanne
that.
went running.
I totally believe that.
So he
Oh,
did it twice, and then so she couldn't go running for a
but
while.
yeah, but notice the kid is now old enough that it exceeds the statute of limitations. So Chip is all set. He's got nothing to worry
Right,
about.
yeah,
Yeah,
yeah. But
yeah.
oddly enough, the IRS does not, even for kids, especially the kids that work for their parents or even work for other people, there's no age limit, because you think about children models and baby models, you know, there's no
I
like,
never had that problem. Come
yeah,
on. Yeah.
that's hard to believe.
Yeah.
Or using their voiceovers
Yeah,
or,
the 3-year-old.
um,
I
so
had
yes,
these dulcet tones back in first grade. Yes.
so yeah, it's so easy. Again, you have to do it correctly. And of course, there's a way, I put you in the contact with our payroll person and get all that set up for you. So as long as you do it right and they're not doing anything dangerous, they can work for you and it doesn't interfere with their schooling, then they can work for you. Now, the teenagers or the preteens, they can manage your social media. So, heck, just set up a business Facebook page, which is free, or an Instagram account or a Twitter account, and have them continually post pictures and videos of you, of them. Kids are a great marketing tool, one of the best. They get the best reactions between kids and pets. Have them, if you have pets, that's even my marketing group, marketing firm that does my marketing. They're always like, take a picture of your kid. I don't have kids, but I'm like, well, that's not going to happen. But take a picture of your dog, take a picture of your dog, take a picture of you golfing, you and your family out and about. I mean, that's what really gets, I can post tax tips all day long, get nothing, which I do on my business Facebook page. I post a picture of my dog in her sweater and I get a ton of likes, Anyway, it works the same things with kids. So, managing your social media, helping, do little errands or in your home office, cleaning. And then even kids that are too young to do that, take pictures of them and basically use them as models. And we have a modeling contract that we give you and that we prepare for you. So you want to be putting their pictures on your business Facebook page, or your Instagram, or having them do videos. And it's so funny because now when you get postcards from your local dentist and it's got him and his whole family on the postcard, that's exactly what he's doing. That's exactly what he's doing.
See, and I always thought kids were overrated. That was a joke. And so, but now here's where we can monetize our children. This is awesome.
Yes.
No, but this is what you had me do. Now I have 2 kids who are, still in that, I'm responsible for them stage, and they're, in college. So, I mean, listen, we got tuition, and I pay their rent, and I do all that other stuff, and they need to work for me. And so, for instance, what was the 22nd of the month? I got 5 days. I got to run payroll, and one girl, one of my employees is going to get her rent and her tuition paid by me. All good?
Yes.
Okay.
And so you employ them. All you have to do is keep a timesheet. If you want to use them as models, we have modeling contracts. And then you you run it through your payroll. You set up a separate checking account for them. And if they're under, if they're minors, you're the custodian. Then you deposit it in that checking account. And then you use that money in there. You can pay for their education. You can pay for extracurricular activities, for living expenses beyond your home, and travel, and saving for college.
My kids won't put me on their checking account. They don't trust me with their money. So
okay.
they don't. Yes. Actually, fortunately, my kids are so great with money. It's unbelievable, and that I just pay them, and they pay their tuition and they pay their rent. They're so financially responsible. It's great. I don't have to worry about it. So
that's great. And there's so many great stories. It's interesting because the parents of all the strategies, they love this one. One thing you can do is also put your, at your business, in your office, put a bunch of pictures of your kids, in your office, and even get one of those digital frames that's constantly, where you can upload new photos and stuff. But there's several instances, I've got a chiropractor who's a client of mine. They've got 5 kids, all pretty young. So she has them all working, they can even like draw things like as part of their art project. If they're doing some art that you could put on your Facebook page, to promote your business, something really cute. I had one, I actually had my niece do that.
Can't you see the IRS agents just confounded Facebook? They've duped us again. Now they're like, that's so funny. Oh, all right. Listen, there's one other tax benefit, and folks, definitely contact Christina. She's going to take a look at your whole system and what you got going on. But I want to talk about one before we are forced to, I feel like singing the Carol Burnett song and pulling on my ear when I'm done here. But there's one other tax strategy that, I'm a little leery of, and it all dates back to Willie Nelson, and I'll explain why in a moment. But so I end up owing $100,000 in taxes.
Mm-hmm.
And you say, instead of writing the check for $100,000 to the IRS, you have someone else that I can give the money to.
Right. Yes. Okay.
Okay. Let me just, and before you give your answer, let me just tell you why I reference Willie Nelson, because so many people will say, well, is it a good investment? No, but it's a good tax shelter. It's a good tax thing. If it's not a good investment, don't do it. Don't do it for the tax benefits, because the IRS can change their mind and then it costs you a ton of dough. So Willie Nelson, at 80 years old, he's out there still playing circuses because he still owes a tax man. I don't want that to be me. So let's talk about this particular tax strategy. I love how I set that one up, huh? Good luck getting out of that one.
That wasn't exactly a softball throw. It's
No. Oh, I lured you in all podcast long, and now I'm going to get you.
Yes. So this is one of my more advanced strategies, and of course I have several of these. And what that's what I do. So when I present the tax plan to you, and by the way, if you do contact me, the first consultation right now is absolutely free. That might change down the road because I'm getting so many. I may have to start charging a nominal fee that could
wait until this podcast hits. Your phone's not gonna stop ringing.
Yeah. So as of now, until the end of this month,
bring your cash in while she's slashing, everybody.
It's a complimentary first consultation, so I can get an idea of what I can do for you and how much money I can save you in taxes. And what I do when I present the tax plan to my clients is I offer them like several strategies, honestly, that they can even pick and choose.
Yeah, that's the way we did it.
Yeah. So
and I think we're kind of growing into it too. I think as we get more sophisticated with this tax planning business, I think you'll see us doing more and more stuff.
Right. Yes. And as you grow, and each year we're updating it. We're constantly in communication, as you know, and we're meeting and all that good stuff. So anyway, so this is just one of them.
Let me just stop you there. And I know I keep interrupting, but that needs to be stressed. The responsiveness of your office is like nothing I've ever had before. Okay. I know my clients call me and I answer the phone right then and there, but you're the same way. And compared to what I was dealing with before, breath of fresh air. It is just amazing. So bravo.
Oh, well,
thank
you. Yes, my CPA who works for me is named Jennifer Lawrence, not the actress.
I know, but that's how I look at it. Like, what is her name? Oh, Jennifer Lawrence.
Jennifer Lawrence.
Yeah.
She's not the actress, but you will want to give her an Academy Award for what she does.
And her assistant, Greta Garbo, she does great too. Awesome. Yes.
Actually, Amy, she's been amazing. She's our communications manager, and she's fantastic as well. But anyway, among others. But thank you for that. Yes, we love our clients so much, and we really appreciate that. Okay, so Congress, and let me just kind of preface this a little bit. With a tax code, Congress is controlling us. And they want to motivate certain behavior, and reward certain behavior. And that's one of the reasons why we'll always have the tax code and taxes, and, they'll never get rid of it. But one way, the big motivation that they want to encourage right now is investing in environmental issues, specifically solar energy. We're woefully behind with a solar energy grid because our electrical grid right now is 150 years old. It's a real weakness in our country. Not just the fact that it can go down, as we, recently witnessed, but it could also be easily attacked. So just various reasons we need to get off that. Electrical grid and get on solar and all that good stuff. So anyway, so Congress, and they tried to fund a company during the Obama era, and it went bankrupt, and we lost a ton of taxpayer money. So then they decided, instead of doing that, why don't we just give really big tax credits and benefits to solar companies that are being successful and are making money. And so that's what they're doing now. So we're just taking advantage of that. And I'm a tax attorney for a solar company. So I make sure that they have been set up correctly, and it's very conservative. We've set them up very conservative because I want to, when my clients get audited, which they rarely do, but when they do, they've passed all their audits, and because we have everything already in place and we've already vetted everything. So same thing with this. And so we've just set it up to where you can invest in this particular solar company. And because of right now, the 26% tax credit that Congress is giving for 2020 and the accelerated and bonus depreciation, you become an LLC in that company. So not only do you get the 26% tax credit, but you also get the net operating losses that the company is able to share with you. So for example, and you probably have gotten these emails, or a lot of your listeners have probably gotten emails from their current electrical company saying, especially at the end of last year when people were thinking about taxes and it was a 30% tax credit. And they said, oh, if you want to invest in us and in solar energy, you'll get a 30% tax credit, which would be, you give them $9,000 because you're very generous and you want to invest in solar energy, and you would get a $3,000 tax credit, which is, would be because you're still out $6,000. Or if you have to, people want to put, solar panels on their house, which I, recommend, that's great. You may spend $9,000 on the solar panels, you get a $3,000 credit. Yeah, you got solar panels, but you're out $6,000. Well, the way we have this company set up is that when you invest, not only do you get the credit, but you're also become a member of an LLC, so a limited partner with all its protections, and you receive the net operating losses. Also, the company basically leverages your contribution, just like, well, your listeners would be very familiar with this. So just like when you buy the house down the street, to flip it.
20%, you get the 80% loan.
Right. Yeah. Or back in the day, you could get 100% loan,
Right.
So you use someone else's money, you let it appreciate, you sell it, you use the equity in the asset. When you sell it to make money, get a gain, pay back the bank, keep the money, keep the gain for yourself. And people, as you know, your listeners are building wealth every day by just, using financing and using the bank's money and the investors' money to build wealth for them and their investors. So it's the same concept. So when you contribute to the solar company, they match your contribution so that your basis and your capital contribution is really doubled, and the amount of solar equipment that company is able to implement is doubled. So then you get a huge tax credit, huge net operating losses, which can wipe out your taxable income. And then now it's also an investment. So you get a return on your investment for right now. For last year, it was 7 years. It may even be longer this year because it's just doing so well. So also a return on your investment, just like any other investment that you get paid quarterly in USD dollars.
Okay.
And that can also be tax-free.
Okay. Let's walk through this now. All of that was amazing. Mm-hmm. Let's put it into practice. Okay. You finish my tax return, mm-hmm. and I owe $100,000, let's say,
right,
to the IRS.
Mm-hmm.
What do I do to minimize that obligation?
So, well, we need to do it. We need to plan ahead.
Okay.
So let's just say we're planning ahead. Let's say for 2020, Let's say in June of 2020, you say, Christina, I'm going to owe probably, it looks like even with all your tax strategies you've already set up, I'm doing so well, I'm going to owe $100,000 to the IRS. And I said, well, don't pay the IRS anything. Hold up. Don't make your quarterly payments.
Okay. Hold on. Because that's, what you're thinking is if I own 100,000, it's June. Hey, I'm a little tapped for cash because I just had to finish my tax payment for April. But I'm still doing my quarterly filings. You're saying don't send those quarterly filings to the IRS. That's where I'm going to use the money for 2021.
Right. Yes. For 2020 and on. And that's why it's so important for people to contact me like now at the beginning of the year so that we can this is one of the strategies that we can set up. And again, if you don't like this strategy, there's other strategies.
Yeah, no, there were so many. Yeah, this is the one, but the more and more I'm hearing this, I know I'm going to have to go there at some point. I'm heading that direction. I know I'm going there. So this is great. I want to hear the steps now to take to make this happen.
Right. So now, instead of sending the money, because you got to send the money to the IRS anyway, right? And we're not going to wipe out, but you're still going to have to pay, your fair share of taxes. My goal is to get you down to a fair share, 10 to 15%. To me, that's fair.
Christina, just treat me like an illegal immigrant. That's all I want you to do. That's all I want. Okay, now this is typically what I tell. Hey, Deb, can you dub that line instead of illegal immigrant? Just say Democrat. Okay, go ahead.
So, but let's just to make it simple. Let's say, and these are just round numbers. So let's say you owe $100,000 to the IRS. Well, instead of paying $100,000 to the IRS, which you're never going to get that money back, right? Not even in Social Security, probably down the road. I mean, you can kiss that goodbye.
Yep.
And instead of, do something good for the environment, help our country out in a real way. Contribute that money to solar funds so that they can use that money to implement solar equipment. Right now, they're really working on a lot of putting solar panels on not just residential homes, large residential communities, but also huge commercial properties to produce solar energy that they are able to sell to the electrical, company and others. So contribute it to solar funds. They get such a huge credit and net operating loss because you're not just contributing the money to get the tax credit, you also become a member in the LLC, which that's the difference than other solar companies. They'll just take your money and give you a 30% tax credit. We allow you to be a member, an LLC, a member in an LLC with all its protections. You're never liable for more than what you contribute.
Okay.
They're going to match close to your contribution, so that leverages that money to be able to put up more solar panels and produce more solar energy, which gives you a bigger credit, a bigger net operating loss. And so what that does is it wipes out, and I'm telling people, it depends, again, totally depends on you, depends on your tax bracket, depends on how much you're making, your situation, but anywhere from 80 to 100% or even a little bit more of your tax liability. So let's just say best case scenario, it's able to wipe out $100,000 of your taxes. So instead of sending $100,000 to the IRS, which you're going to lose anyway, you invest in it, into the solar funds. So now it reduces your tax liability by $100,000. And then you would make money off of that as well, just like any other company, not forever, but for a certain amount of years. Because the first year you get the tax benefit, and then the next few years, and again, we haven't decided for 2020 exactly how much it was going to be. It's going to be but for 2019, all the investors are going to get that return for 7 years, in years 2 through 7, that they're going to get a return on their investment paid to them quarterly. Now, but this is so great. It's such a win-win situation, right? And this is why so many of my clients, we raised easily $1 million at the end of last year, in 3 months. And that was just from a small group of people, because it's just so exciting and it's so advantageous, because worst case scenario, and people always ask me this, what if they go belly up, or what if they lose money? Well, that's great too, because even just from that one investment, you wiped out your tax liability in year one. And if let's say you never contribute again, and they keep losing money for the next years, you'll just get more tax savings, way more than the $100,000 that you contributed. So it's just a fantastic program. Yeah.
Oh man, yeah. Let's talk in June. I think we're going to have a lot to talk about. That sounds. Oh, if I have to write, even if the company loses money, as long as I don't have to send the money to the IRS, that's a win-win for me, for crying out loud.
Right.
Okay. All right.
And again, that's not, I mean, these are very simple numbers, and you'll still pay something to the IRS, but usually we do different scenarios for you. So probably in that case, maybe instead of sending, let's say you owe $100,000 to the IRS, instead of sending $80,000 of that to the IRS, you would send $80,000 to solar funds, and that $80,000 you send to solar funds would wipe out $80,000, maybe a little bit more of your taxes for 2020.
Yeah, and that's the point. You know, what happens, this is how the rich keep getting richer, right? Where
Yes.
it's like I don't pay the IRS $100,000. I pay another company $80,000. I only pay the IRS $16,000, and I still have an asset of $80,000 somewhere that's doing something else for me.
Yes.
So, yeah.
Yes.
Boy, this is, I tell you, if we do this enough, I think I'm going to be the next Tom Steyer, running for president with a funky looking belt. Yeah, that's it. I don't think Christina even knows who Tom Steyer is.
Like,
oh my gosh, he's running for president, Christina. He's running for president. You got to know who he is. Obviously, he has not started advertising in Florida or Tennessee yet.
No, I know.
Yeah,
I know. I've been so busy. I have
don't
not
worry,
really
don't
honestly
worry.
paid
By the time you get the chance to vote, he'll be sitting on a beach somewhere, closed up his campaign. He's not going anywhere. So, all right, Christina, thank you so much. I love working with you. I want so many other people to I've always sent a couple of my clients your way. One of my clients, did he really have a tax return over 500 pages? You had to go and like clean out for him and tell him, like, this is what we can save for you. I mean, gosh, you should have charged him a big upfront fee, I bet. Tell him I said that. So, but listen, I mean, my clients are very happy with you. I'm sending everybody your way. I've never had this type of tax treatment planning before. And I just think it's absolutely fantastic. I can't say enough. And everyone, down in the show notes, click the link to Christina, book a time with her. Remember what she said. You better act fast, because I'm telling you, after this podcast is out, her time is going to fill up, which I'm so happy about. But thank you so much for being. I think Monty has a parting gift for you. As a guest on our podcast. Yeah. Oh.
Nice.
She gets all excited. I think it might be a Multifamily Investing Academy pen.
I'll take it. Yeah. Okay, I would be honored.
Sure. I'll send it
if it's
to you.
Free, it's for me. Well, another thing too, I have to say, Charles, is that because I do have a lot of attorneys as clients, all these strategies, they go over these as attorneys with a fine-tooth comb. Yeah. And they approve of them.
Yeah, I'm telling you, I hear you talking about, setting up the LLC that does the investment in it, and the LLC is the one that receives the NOLs. Well, how do I then benefit from it, on my personal tax return? And I know you've got that. You got me covered on that. 6 ways to Sunday. So that's awesome. Christina, you're the best. You're the best. I want everybody to have somebody like you in their life. It's awesome. It's awesome. So thank you so much for being.
Thank you, Charles. You're wonderful. You're our favorite.
Thank you. And you are going to be hearing more from me lately on my 2020 tax, on my 2019 tax, not on my other problem that we have.
Right. Yes. That was someone else that messed that up.
I don't want to burden you with that one, baby. Not a chance. So, all right, kiddos, I will talk to you soon. Thanks.
All right.
Christina.
Thank you. All right.
Bye-bye.
Bye.